So, promising sector. Where should all this money be invested in? What are the promising sector we're looking at? We have always preferred those sectors that are benefiting in Vietnam's domestic consumption success story. This is driven by several factors, including the urbanization, the young demographic, better job and high income, and a growing middle class. The consumer discretionary sector have traditionally seen the highest growth. People with more money in their wallet will be spending it on dining out, consumer electronic, jewelry, just to name a few. Although there will be a short-term hit from the outbreak, we continue to expect this sector to resume strong growth. Healthcare is another sector benefiting from the growing middle class. Vietnam public healthcare system is expansive but overburdened. Private healthcare is expanding and enabling some people who previously would have to travel to Bangkok or Singapore for medical care to receive it at home today. Energy is also another promising investment in the sector. It's a top government priority. Demand of energy is outstripping supply, requiring Vietnam to import some of the electricity it uses. More manufacturing coming to the country will only increase demand. LNG and renewable energy source are the future for Vietnam, and investment opportunity abound. Domestic manufacturing of goods and material used for construction, infrastructure, and property development is also an interesting sector. The government expects to accelerate infrastructure development as a way to boost the economy, and locally sourced material will be the key. On a related note, we intended not to invest in companies that manufacture mainly for export. The uncertainty are too great. Finally, technology or tech is very interesting. Vietnam has been seeing a tech boom over the past few years, with startups working in a wide range of areas, including fintech, AI, real estate technology, and logistics. It was an enormous promise of this scene that led us to launch our Vina Capital Venture vehicle back in 2018. Now, tourism will definitely make a comeback in 2021. As I mentioned earlier, tourism was growing rapidly pre-outbreak. That is now on hold. However, we expect that tourism will pick up once again in 2021, and Vietnam could benefit enormously as it's seen as a safe haven from the outbreak and offer great value for money, in addition to beautiful scenery and a rich culture. Of course, the timing of this depends on the global economic condition, transportation option, and the medical situation. But now could be a good time to invest in this sector as a year to reboot. Now, let's look at investing in Vietnam. This is a savvy audience, so you probably know the various ways to invest in Vietnam. I'll just highlight a few. How do you invest? The key factor to determine the method of investment determining the objective and the role. Do you want to be active and operate in Vietnam, or you would rather participate more passively? Foreign direct investment, FDI, is obviously the most active route. FII, which is foreign indirect investment via public or private equity, can be active or passive, depends on the size of the stake and the desire to involve in an investee company. Fund, like those offered by a firm like ours, and a proxy for Vietnam growth, we have experienced investment team who do the research and diligence, understand the language and the cultural nuisance, and manage on behalf of investor. Funds, IMA, and co-investment allow investors to mitigate some of this risk. Meanwhile, ETF are passively entirely. Investment constrained during the outbreak. While Vietnam stock market have corrected significantly during Q1, just like elsewhere, as March 31st, Vietnam index fell over 30%. Listed equity valuation have fallen 30 to 40%, and many stocks that once trade on a high PE are now much more attractive. The market currently trading at a trailing PE of about 10 times, the cheapest in 8 years and the lowest in the region. There are definitely some interesting buy out there. Key considerations include blue chip stock that are reasonably liquid, stock with foreign room, and those that have a history of foreign inflow. Example, they have been interesting before. Unless one has a huge appetite for risk, it's probably not the time to invest in little known or lightly traded stock. Other considering including stock in the sector that I mentioned earlier, those that will play a role in the continued development of supply chains in Vietnam. And those have delay element, such as producing a good that will be still necessary in the future versus a lost forever element, where product or services provided is gone, such as flight. Other investment considering during the recovery and beyond, once the recovery takes hold, there will be a return to fundamental. Company with strong balance sheet and market share will resume growth. This will likely draw out period, and listed equity will continue to be volatile. This may bring a renewed focus on private equity investment and fixed income product. With respect to PE, there are going to be good promising companies that need investment to recover and resume their path to growth. The stock market won't be an option. Finally, businesses that have a weaker balance sheet but have a lower ongoing capital requirement and own real asset, such as tourism and property development, may also be worthwhile to consider. Some cautionary note: investing in Vietnam comes with some risk, just as it does in any frontier and emerging market. How can an investor mitigate those risks and prepare for the best possible outcome? So how to successfully invest in Vietnam? As an investor in Vietnam for over 20 years, I have learned a lot, both from my personal experience as well as from observing the experience of others in the market. My top line advice to foreign investors considering the market for the first time is as follows. First, you need to take a long-term view. A lot of so-called low-hanging fruit have been plucked, and the day of fast money are over. Patience is important. When operating in Vietnam, whether in terms of generating a return on investment or in dealing with bureaucracy. 2, conduct thorough due diligence. Vietnamese business can have some unique way of operating, so it's critical to get a look under the hood at the financial statement, company ownership, land use right, customer relationship, and so on. Trust is verified. It's a good mantra to live by, to quote Ronald Reagan. 3, understand the market. Vietnam is not the same as Thailand, Indonesia, or Malaysia. One of the biggest mistakes foreign investors make is assuming that all of the Southeast Asia market is the same. It's not. Each country is on its own development trajectory with its own way of working. Another mistake is assuming what worked in the home market will work in Vietnam. Successful businesses tend to be those who know the market and all about and to tailor product and service accordingly. Finally, have a trusted local partner, someone on the ground with experience, network, and knowledge of how things work, as well as the language and the culture is essential. Vietnam is open to foreigners, perhaps more than any other neighbor, but there is no substitute for having a Vietnamese partner. Conclusion. Just to wrap up my presentation, in closing, Vietnam is and will continue to be a fantastic place for investment. Although the global economy will still be an unknown amount of time to take hold, Vietnam is well positioned to rebound. Even with revised GDP growth forecasts, Vietnam is still poised to be one of the fastest growing economies in the region and the world. The opportunities here are virtually endless. But to be successful requires patience and work to know how to capitalize on them and deal with the challenges. Thank you for your attention. I'm always available to answer any question you may have via email and to discuss potential opportunity. Thank you very much.